Hey guys, this is GD back again today. Uh, today I'm going to discuss about gold. You guys might be wondering. I have been doing the videos on the stocks, and I follow Warren Buffett, and I am kind of a value investor kind of a guy, right? I mean value and growth, both I look at it. So how come I have a gold in my portfolio, right? I mean uh, so uh, just to mention that the gold I do have in my portfolio, and I consider that as an insurance, right? I mean why do you buy car insurance or homeowners insurance? Because you want to, let's say if something happens or some accident happens, your car value is, let's say, $50,000-$60,000. You pay a premium every month, so that in case something bad happens, the insurance company covers your losses, and they can pay off the car amount, right? So you pay like $100 a month premium for your car, and then in case something happens, let's say you get the full value back for the car, right? I mean, so that's basically an insurance. So gold behaves the same way, right? I mean, in recessions, gold go up, right? Go up a lot, and if the times are good, then the gold does not perform well. But over a longer period of time, if you see, gold has performed well, and it is kind of a currency, right? I mean, so before we start with the gold analysis, I just want to mention that I do have Bitcoin also in my portfolio, and I know this is going to surprise you guys, but I have been listening to a few macro people like Rahul Paul and Lynn Aden. I very much like them. They are very good macro people, and I'm going to do a separate video for Bitcoin. I think Bitcoin has a huge upside, and that Bitcoin has similar characteristics like gold. So when I do a Bitcoin video, right, I mean, I'll cover those points, so that I'll kind of go over the analysis that I have done for Bitcoin, read various articles, and why I am so much having confidence in Bitcoin, and it has the similar characteristics like gold. Many people are defining it as a digital gold. We can start with the gold analysis, gold portfolio analysis. But before that, I request you guys to please subscribe to my channel, and like my videos, so that provides me a lot of encouragement. It takes a lot of effort from my side to excuse me, to go through the various articles, listen to different people, macro guys, fundamental guys, technical guys, and then present my points to you guys, right? I have and especially for actually Bitcoin and gold, I had to do a lot of research, to arrive at a conclusion, because that's not a typical value investor kind of an investment, right? I mean, it's a contrary investment for value guys, right? I highly encourage that you guys please subscribe to my channel, right? So that I get kind of a lot of encouragement to do more research. So getting back to the video, getting back to the analysis of gold. Overall, if you say you should have 15% of portfolio either in gold completely, or gold plus Bitcoin. I would not say 15% of portfolio only in Bitcoin, because Bitcoin is little bit of risky asset compared to gold. So I like to mix it up, right? I mean, a gold plus Bitcoin should be equal to 15% portfolio. So it could be 12% gold, 3% Bitcoin, 14% gold, 1% Bitcoin, or 10% gold, 5% Bitcoin, right? I mean, depending upon how comfortable you feel with Bitcoin, you should take that position. For me, I have 5% Bitcoin and 10% gold. I have a lot of confidence in Bitcoin. If you listen to the gurus, they will say have 1% in your portfolio in Bitcoin, but I have 5% because I have a strong feeling that Bitcoin is going to go up a lot. It's going to give a lot of good returns if you see 5 to 10 years. So that's why I have 5%. It's just my comfort. I'm comfortable holding 5% in Bitcoin. So gold, right? So gold basically is a hedge against inflation as well as best currency to hold in the current environment with low. So gold kind of is actually a very good in both ways, low inflation as well as inflationary environment. So traditionally, gold has been a very good hedge against inflation. And as you guys might have seen last week, the inflation data came and inflation went up, most in few years, so and that's going to happen, right? I mean, if you have seen my American Express and Bank of America video, I mentioned that this time the money printing that has happened is very different. The money has actually gone in hands of people, rather than going to banks, which was the case in 2008. So if you print money and give it to directly to consumer, right, obviously people are going to go and spend, and then that's going to create an inflation. So in that inflationary environment, the gold is going to do very well, right? I mean, it has proved that in the past, like over 5,000 years, right? I mean, I have that one of those points, it has proved over last many years that it's a very good hedge against inflation, as well as it is good in current environment, because low interest rate environment, more and more money you print, the value of dollar goes down, right? The dollar gets devalued, and gold acts as a currency. Believe it or not, gold is a currency. If you listen to Ray Dalio, who is one of my favorite guru after Warren Buffett, he talks about the gold as a 10% position in a portfolio, and gold is basically a currency. So if you see, gold is measured in United States dollar, but then gold, if you compare to any other currencies, right, Canadian dollars or Indian rupee, or any other currency you take in the world, Chinese currency, and then Japanese yen, the gold is the best currency, right? I mean, it's the currency. I mean, it's a physical gold, but its value is measured against dollars, and it has gone up against dollar over the past many years, and we'll come to that point in point 3. So second point is, gold is a medium for exchange accepted all around the world. So gold, you might have heard a lot of history about gold. So go and watch one of the videos, 5,000 years of gold's history, on Real Vision. So you will see that, in that video, you can find that video on YouTube. Just type Real Vision 5,000 years of gold, and you will get that video. So over there they have mentioned, that in the World War days, right? I mean, a few families wanted to, or 19, it was not World War, I think in 1900 or something, few family wanted to go out from on a boat from Asia to United States, and they had gold bar, so that was accepted by the people, and then one guy could save his family and get them over in United States. So gold bars, right? I mean, you go and give it anywhere, they will accept it, right? I mean, no matter if you buy a gold bar in United States or buy it in India, let's say 24 karat Canadian maple leaf, or you buy it in Canada, or you buy it American Eagle gold bar 24 karat, no matter wherever you go to Europe, you go to Asia, you go to Australia, you go to United States, they will accept it. So when you give it to them, they will give that currency of their country to you. So it's a globally accepted currency. So that's one of the very good characteristics of the gold, right? I mean, let's say if you are going a Japanese yen and going somewhere, it's not going to get accepted, right? I mean, it's going to get accepted in Japan, or maybe a few other countries, but not all the countries. So that's a difference. Gold gets accepted in all around the world. The third point is, gold appreciates against all other global currencies, including world reserve currency, which is US dollar. Best example to describe is Model 6. Okay, so this is very interesting, and this is where a lot of research goes in, right? As I mentioned. So gold appreciates against all the currencies. So if you see right now, the gold is like around $2,000. It hit a high of 7-8 years against dollar, right? So it hit a high of $1,900, I think, in 2011. Then it was kind of flat, throughout the 7 to 8 years where it did not perform much, like 1300, it went down to 1100, then 1300, 1500, 1600, and now it is 19 and 1900 and $2000 again, right? So but if you see, right, any other currencies around the world, gold hit all-time high like last year or last year, 2 years back. Why? Because dollar appreciated against other currencies, but gold was not appreciating against the dollar, right? I mean, so that's why it was like in 1900 range. Now it has broke out in $2000, so it is performing very well against dollar as well, so that's where I say it's a best currency you can hold. And that's $2000 is taken out now. People are talking about target of $3000. I think it's going to take little time to go there. It's going to go to $3000, I feel, but it's going to take some time, not in a hurry, like it went from 1500, 1400 to 2000 in like last 4 to 5 months, right? 4 to 6 months. So it's going to take some time. But the example I want to give is a Motel 6 example, and this is the best example which describes that how US dollar has depreciated against gold in last 40 to 60 years. So Motel 6 was started in 1962, right? And Motel, why Motel 6 name? Because they came out with the concept that the room in the Motel 6 is going to cost $6, right? In 1962 you can pay $6 and you can rent a Motel 6 room for a night, right? I looked up the price of 1962 and of gold, and gold was $36, $36, $35. So what does that mean? That means is, if you go in, you can buy with 1 ounce of gold, $35. You can buy 5 rooms in 5 Motel 6 rooms for one night, right? In 1962, right? Today, if you go to Model 6, the price of the room is $60, right? So it has gone up 10x, right? In last like 60 years, correct? Today, the price of the gold is $2000. So if you divide 2000 by $60, how much you get? You get 35 rooms. So look at the power of gold. In 1962 you could buy 6 rooms. Today you could buy 35 rooms. I mean, it's just tremendous. It's just amazing, how much dollar has depreciated, how much currency Fed has printed. They have printed $1 trillion in 2008. They printed $3 trillion right now in 2020. No, guys, more. If you print this much money, the value, it devalues the dollar. It devalues the currency. But the gold is not depreciating because gold supply is fixed. You need to understand this. So the overall market cap of gold, right, is $10 trillion, and there is and whatever gold is there is existing in the world. People just exchange it. There is very little gold coming out of the ground. It's just the gold production is like 1% a year. A growth is 1% a year, right? I mean, which is very low. And with the gold production cost hovering around like $1,300, $1,200 from this many years, and gold was not going up, so people stop producing. So why would you produce the gold if you are going to make a loss, right? So if gold sells at $1,200, your cost to produce is $1,400, and overall cost, why would you produce a gold, right? I mean, you don't want to take $200 an ounce a loss, right? So but now that's going to change, right? Because gold is $2,000, the cost is $1,400, so people are going to make $600 an ounce, and that's where I think the gold miners are going to have a very good time going forward. So I'll go through that in point 5. So next point is, gold has proven a store of value in last year. So gold is also currency, but a store of value, right? That's another characteristic of gold, right? And it has proven for 5,000 years. As I mentioned, go and watch that video on Real Vision, and it has proven its characteristics. Gold doesn't fade away. If you have a physical gold, you keep a bar, it stays as it is for many years. It's not going to lose its shine. And that's a store of value, medium of exchange. You can exchange it all around the world. That's where the gold has a lot of power. The next one is way to play this. Okay, so how you can play this theme, right? So you can either buy in physical gold, go to the store and buy a certified physical gold, 24 karat gold. Either you can buy American Eagle or Canadian Maple Leaf. two are very popular brands, very popular brands of gold which you can buy, gold bars, basically gold coins, or through you can buy through ETFs. So there are two ETFs, GLD and BAR, which are listed on the stock exchanges. So what these ETFs basically do is they it's online, right? I mean, so you're buying. So when you buy a stock of a GLD or a bar, it will go and buy that much amount of physical gold and store it in vault. So basically you don't need to worry about storing it, in your house or in a bank or anywhere, so you're just paying them and they will store a equivalent amount of the gold in the vaults, so that's where this is a little easy, right? I mean, the GLD side trading 160, 170, bar is like $14-15, so you can buy $14-15 one stock, right? And then if it goes down, you can buy more, right? I mean, so I think that's a better way to play if you don't want to go into physical gold. Or you can go through the gold mining ETFs, like GDX, or gold mining stocks such as Barrick Gold, Equinox Gold, so these are the miners. So miners basically they mine the gold, and the more gold go up, right, they're going to make a lot of money, right? Because see, as I told, you need to find the miners which production cost is low, and they can take they can benefit a lot through this upside, right? I mean, the gold upside. So Barrick Gold is a stock which Warren Buffett bought. Just Friday the SEC filing came out where Warren Buffett bought $500 million of Barrick Gold. So this is a very, very good news. $500 million is nothing for Warren Buffett, where he is managing 200-300 billion dollar of portfolio. This is nothing, not as a percentage, very low. But what this says about gold? It says about gold is that a guy like Warren Buffett, who never ever wanted to buy gold, is going and buying Barrick Gold, which is saying that he is bullish on gold price. Otherwise he would not buy a miner, right? I mean, if the miners are going to lose money, Warren Buffett not going to put money in that stock. He definitely sees an upside for the gold, and for a better reason, right? He also knows that the economy is not going to do well, the recession is going on, and recessionary environment, gold performs best, and the currency dollar is depreciating, gold is just standing out as the best currency in the world, right? So that's why he's taken a small position. It's a big position if you say 500 million, but for him it's a very small position, right? Overall portfolio. But that shows the confidence that the gold in gold, right? I mean, it's going to have an upside. So on the mining stock and all, so what I own, right? I mentioned usually, right? So in all my videos, what I own. So as I mentioned, I own 10% of my portfolio in gold. So let's say if I am having $100 portfolio, I put $10 in gold, and usually I buy the ETF. Like I have some ETF of GLD and BAR, and I have some physical gold as well. Not much, because it's then you need to store it, right? I mean, I don't take that hassle of storing it, right? So that's why I buy GLD or BAR, and I also have GDX, little bit of GDX ETFs. It's a gold miner ETF. And then Equinox Gold, I have some shares of Equinox Gold. Why Equinox Gold? Because I like the guy who's running it, right? I mean, Ross Beatty is the chairman of Equinox Gold. He is I've studied a lot about him. He has proved last 30 years, he can make the good bets. He invests in a company, run through it, and then sells it at a premium price, when gold market is in bull market. So I think the same thing is going to happen with Equinox Gold. I like this guy. He has a skin in the game. He bought shares at a very cheap price, actually, when it was like, so Equinox Gold I think has doubled in last 1 or 2 years. So he bought it like when it was $7 or $8 US dollar. Right now it's a $12 stock, but this guy has a skin in the game. I've studied a lot about him. The gold mining community, right? I mean, they really admire this guy. He's very trustworthy guy. He knows what he's doing, and he knows the gold sector, silver sector very well. So he's a chairman of Pan American Silver, a biggest silver mining company in the world. And you could see the returns of that stock as well. And he's run that company very well. So I have a lot of confidence on him. So that's why I hold Equinox Gold. The last is gold position should be taken as insurance or report for the protect the. So gold is basically an insurance, like I mentioned at the start of the video. I would like to protect my portfolio, right? I mean, stocks and gold go opposite direction. So if the stocks go down, the gold is going to go up. And it can have a significant upside, right? I mean, if the gold is $2,000 so something like Equinox Gold, the production cost is less than $1,000. That's one other good thing about Equinox, apart from Ross BT. Definitely he is reducing the cost. So that's why the cost that is produced, the gold that is produced by Equinox Gold is the cost of that is $1,000, not $1,400 like other gold mining companies. So if $1,000 costs, you just imagine they have 100% upside at $2,000. If the gold were to go to $3,000, they are going to have 200% leverage, profit margin. It's just amazing. I mean, at $2,000, they have 100% profit margin. I mean, show me a company 100% profit margin. Not even Visa and Mastercard. Visa and Mastercard having profit margin of 50%, which is very high. But with the gold prices hovering at $2,000, they are going to have a solid earnings. At least till the gold price remain $2,000 or even go more than that. That's why I'm very bullish on the Equinox Gold company. So that's why in order to protect my overall portfolio, right? I mean, you need to protect your downside. So that's why I have taken a position in gold. I have taken a position in Bitcoin as well. I will make another video on Bitcoin, right? But till now, I like I like both of them, and in this video I try to explain why gold is a good position to have. I think it makes sense to have it 10-15% in your portfolio. I would not go above 10% of gold, because 15% I think is a lot. But 5% of Bitcoin is my choice, and I'll explain why Bitcoin has a lot of upside as well. So I hope you all like my video, and I request you guys to subscribe to my video, subscribe to my channel, hit the bell icon so you every time I upload a video you get a notification. Thank you very much, guys.